there was a big marketing push from Apple yesterday that they were moving into digital services, and they have to do that. But there was very little information on their TV strategy. There was little information on release dates and pricing. But what is their TV strategy, and how do they define success? And that's what was lacking yesterday, so it's very hard to judge. But what's key is that Apple needs to move from a hardware company to a services company, and I think it can do that, and TV is one component.
Lack of stock price reaction may be telling the story, is it not?
Yeah, I mean, if you sit back and look at the big picture, I mean, never in history has a hardware company maintained supernormal profits forever. We know that. And Apple management, of course, know that too. So they know they need to move to services. And already services is a $40 billion business for Apple. To put that into perspective, it's only 15% of Apple's revenues, but 40 billion at Apple services compares to 55 billion in Facebook. And Facebook is, you know, one of the largest companies in the world. So it's done well so far. It's also not just a hardware company. It's got iOS software. It rules the mobile internet. So it's got a good foundation of 900 million iPhone users on which to launch this TV service. But again, even if it gets as many subscribers as Apple Music, 56 million, that's only about 3% of revenues. Last year revenues were about 265 billion. Even if all 900 million iPhone users across the world, the active user base, if they subscribe, then it'll be a $100 billion business, and that'll take it to over $50 billion of services revenue in proportion. So it could be successful, but that's highly unlikely. The most successful video streaming service in the world is Netflix, and that's got 150 million, and it's highly unlikely that Apple can superimpose Netflix because it lacks the content.